All right. And good morning, good morning, good morning. Welcome to another episode of Money Matters. My name is Nev, and Happy New Year. This is a first official episode in 2021. Super excited to be here. Super excited that you are here. Hey, if you are new, you know the drill. If you are returning, you know the drill. If you're watching live, welcome. If you're watching a replay, equally as welcome, and consider joining me every morning at 7 a.m. Eastern Standard Time or Eastern Daylight Time. Well, it's not daylight. I guess it's standard right now. So today we have incredible news. When we left 2020, only a few days ago, it's only been a few days that we haven't done the show. And when we left, the cryptocurrencies were based. I mean, it was interesting. It was very exciting. We've pumped, but boy, have we reached brand new highs. And of course, there's a lot of excitement in the air. We're going to be talking about all of the excitement that we're seeing in the air. We're going to be seeing all kinds of cool things. But of course, there's a warning potentially for those that are trading, because there are certain patterns that are happening within the chart that make me a short-term bullish, meaning there's a great opportunity for a buy. And I'm going to be sharing with you exactly what's been going on. You're going to see some drawings on the chart that I have done a couple hours ago, because I've been up for a while now, and I was geeking out with some stuff, doing some things, and you'll see kind of how it actually played out when we get there. So before further ado, let's do this. All right, y'all. Good morning, good morning, good morning. Yes, we've had a slight wardrobe change. Okay, just it got a little bit too hot in a hoodie, so I switched over to a t-shirt. So what's going on in the market? Well, we have all kinds of super exciting news, anywhere from traditional markets. We're of course going to take a look into that, get you ready for the trading day if you are trading. And we're going to take a look at what's going on with Bitcoin, with Ethereum, with some of the projects, and kind of what to expect. So let's not waste any time, and let's talk about what do we see. Well, here we go. We are looking right now at the freshest of the fresh printed charts, and you see Bitcoin is sitting pretty at $30,201.62. It is down 12%, a little bit more than 12%, but it is up 14.6% for 7 days. And we're going to go in and jump into the Bitcoin chart right now. And here is basically what we're seeing. I am seeing the head and shoulders pattern that has developed between January 2nd and January 4th. And of course, we are seeing this massive dump over here of what's going on. Now, one of the things that you will notice is, if I actually, let me see if I can change this just ever so slightly so you can maybe see it a little bit better. Hopefully this is better for you. All right, you can see this much better, I think. So what's going on? Well, right now what we have seen is that Bitcoin, if we zoom out a bit, we've been pumping like crazy. This is basically when we did the last show was the 29, and the price was around, I don't know, 26, 27,000, 25,000. I'm kind of flirting with that. Since then, we have pumped a whopping all the way up to the top, 33% in basically 4 days. It was absolutely amazing. Now, we have come down since then, but you will see what has transpired. So what has transpired is that we actually came in, we found a high right here at about 33,200, came back down to about, I don't know, the low was about 30,000. Plus minus, and then came back up to the brand new freshest highest of the highs, right here at 34,800 almost, right? Then we kind of came back down, hit back up atop. We didn't break it, and that's what formed this head and shoulders. So you have a shoulder, head, shoulder pattern. And of course, when we didn't break that through, we went actually down. So how much down, how down did we go? How much lower did we actually go? Well, you will see that it is approximately 20%. Now, this is actually good because this is what I was expecting we're going to see when I first opened the chart a few hours ago. I expected us to go down about 20% or so. And the reason for that is because we have this, you can see this purple line that I just drew right here, right around this 30,029. What is this? 29,152. The reason I drew that is because it seemed to be like a good supporting level one, and over here at the 31st it seemed to be a resistance, and then when we switched over to 2021 it became a bit of a support, super short term. But I figured, well, if we could bounce off of that, then we could actually see potentially consolidation sideways and maybe a move on up. Or next thing would be hitting this basically a moving average that is sitting at $27,567. So I figured, well, here are a couple of the, sort of support levels that we could see. And in either case, it was a good buying opportunity. Now we're looking at a 1 hour chart here. And as you can see, we are actually, did break through. We quickly recovered. And if we switch over to a 15-minute chart, let's take a look at what's going on. You can still see that we have this shoulder head shoulder pattern. We did come down on the 15-day. We did almost reach the the longer term moving average of 27.5, and have been recovering really nicely with kind of printing the candles. I think we're going to probably go above 31. 31.5 in relatively speaking short term, but this is kind of what's been going on. So that's what's happening with the Bitcoin right now. As you can see, really good solid buying opportunity. We've been waiting for a pullback for a while, and this 20% pullback on the short term is a really, really good and healthy one. And it sounds like vast majority of people that have invested, when they invested, they actually invested sub $20,000 level, which means that even with this pullback, they're actually still up. Always a good thing. Ethereum is, of course, in a second position by market cap, and current market cap is 109 billion for Ethereum. So congrats for Ethereum. Market cap for Bitcoin did drop down. It was in 660,000 level or so. That's billions, of course. And now we're at the 561 billion market cap. So we did drop slightly, but nothing too horrific that has happened. Ethereum is currently trading at $959.83. It's up 15.1% 24 hours, 39.1% in 7 days. And we did reach a brand new high. I'm going to show that to you right in a second over here. So right now we're looking at Ethereum 15-minute, and we did also have a shoulder head shoulder over here in a 15-minute chart. And what you see, this yellow squiggly line, is what I drew when we were at this at this candle right over here at about 3 o'clock in the morning. Yes, I've been up for a while. I won't lie. So I figured, well, we're probably going to come back down. We might kind of hit this trailing support of the moving average, and then from there do a recovery. And that is exactly what has happened. As you can see, we came back down, we hit the local low of about 890, and have been kind of coming back up. Now, one of the interesting pieces that has transpired with Ethereum is that we did hit a brand new high of $1,169 or so. That's still not an all-time high, but it is a local high. So we have done really, really well. The part that it's kind of made charting interesting this morning is you will see some of these purple lines that was kind of creating this megaphone pattern, right? When it opens up like this, then I was like, oh, this is kind of be hard to predict. But thankfully, we don't have to worry about that anymore because things have changed since then, right? Things have changed since then, and we do see potential resistance level at about 1,000. $30 or something like that in a relatively short period of time. So we'll see if this is going to be a bit of a consolidation or not. If we switch over to a 1-hour chart, you will see that we basically had not much of anything. This is the last time we talked, y'all. This is the last time we talked right over here, and I will get rid of that. We've been having a nice consolidation here from 27th of December till about 2nd of January, and then we started a pump, and of course the pump yesterday was just phenomenal, absolutely phenomenal pump. So really, really exciting. And if we zoom out even further, you will actually see, let me get rid of this guy as well. You will actually see that we have this triangle that we've been talking about in December, and we broke right through it. And this is basically going to mean that we're going to go on up much, much higher. Of course, in the short term, I think we're going to do a bit of consolidation. But I think hitting the all-time high and breaking it is a very, very good potential and probability in, potentially even this week, again, short term, I don't know that I can tell you, like right on this second of this date, things are going to happen, because I don't really know what's going to happen. What I do know is sort of a longer term. We are still very early in this bull market, and I have some articles and some charts and stuff to show you before the end of the show. All right, so let's come back over here. Hold on, let me change the display. I like it better this way for this stuff. So Tether is, of course, in a third spot. XRP is currently trading in 23 cents. It did pump slightly over the last 24 hours, 3.6%. It is down, and of course, we all know why it's down, because, well, the SEC lawsuit is pending. They're not going to settle. That's at least what they have posted and tweeted. So we'll see how that goes. It's going to be months before we know what's happening. One thing that we do know about XRP is that it is being delisted from many, many exchanges. And so that's something that you should be definitely paying attention to, because, delisting it means you can't really trade it, right? Like how are you going to do that? So you can't really do much of anything with that. Litecoin has done pretty darn well. It pumped 17.6% in 7 days. Polkadot, holy mackerel, Polkadot actually hit 2 digits. We have come down since, of course, just about everything has come down since. If we take a look at the biggest pumpers over the 24 hours, dynamic set dollar actually has pumped almost 80%. It was well below $1 only I don't know, a couple hours ago, and now it's at the $1.36, 115% in 7 days. So really, really nice. Loopring has done fantastically, 50.7% in 24 hours. Nano 30.2, Swissborg 16, and so on. So we kind of go down into the lower digits. We do have some really amazing pumps. On the dumping end, Dogecoin is back down 34.4%. It's always interesting that this coin kind of does these crazy TikTok inspired pumps, and then of course it comes back crashing. So God love them for trying. I mean, it does have $1 billion market cap. Reserve token rights token is down 15.7%. Sia coin negative 15.5, Theta network negative 14.3, OKB 14.1 down. So we do have some on the dumping end. On the pumping side of things, I mean, you can see dynamic set dollar definitely takes cake for the week. Dogecoin second spot, Loopring third spot, Polkadot has done really well, RSR has done well, Thorchain, Uniswap, Theta, Celsius, Nexus, I mean, you just name it. A lot of the altcoins have done really, really well and have performed incredibly well. So that's the exciting part of what's happening in the crypto market space. And before we get into the news and what's going on with that stuff, I do want to go and take a quick look into traditional markets, just because not everybody's in crypto watching this. So you might be more into the traditional markets. So let's take a look. Let's get you ready for the week. And we're looking at the futures chart right now of S&P 500. As you can see, it's, of course, this flat line is because we were closed for the holidays. We did pump really nicely. And for the day, we did kind of start coming up. We are up about 0.5% plus minus with a slight downturn. So we'll see how things are going to roll. Same story happens with Dow Jones Industrial and Futures, 0.5% up. NASDAQ, 0.5% up, pretty much the same story across the board. Russell, almost 1% up. So we're seeing smaller cap stocks performing really well in the short term right now. So we'll see how that all holds up. There's certain things to watch out for over the next 2 to 3 weeks. I'm going to talk about it in just a moment. And let's take a look. Crude oil actually has pumped really well, earlier this morning. We have seen a bit of a dump, as you can see right here, and are slightly up 1.46%. Gold has done really well. And gold price has pumped in a day at 2.18%. You can actually see it go up. Currently trading at $1,936.50 exactly. Silver is very interesting. Currently at $27.50 exactly. Weird, but true. It's up 4.1%. So we do see that these particular markets are going to do really, really well. I believe that precious metals are going to perform incredibly well, just like crypto. I think crypto is, of course, going to eat everything, but that's just me. I do think some tech stocks might do really well, but I am worried about the tech and the stock market as a whole. Treasury yield is basically down. We are still in below 1%, currently at 0.917, which is pretty much the same where we were last week when we talked about, when we were doing a show, I want to say last Wednesday on the 29th, something like that. That was the last show of 2020. We was the same amount. Now this chart over here, let me change this for you so you can see it better. This chart over here, what you're looking at is a dollar index, and this is the all-time. So this is the all-time high that we've seen back in 2000 and basically in January of 2002. We did come back down, came back up, and in 16 we were at new high of 102.124. Since then we have been steadily falling. So right now what I am looking for is, you will notice a pattern right over here. Let me see if I can draw it for you. Right over here you see a shoulder, a head, and a shoulder right over here. Similar pattern to what we just talked about and discussed for Bitcoin and what has caused the Bitcoin to come back down. So I'm looking at that stuff, but we're basically at the neckline-ish. Technically speaking, the neckline-ish is kind of going this way. So if we don't basically, whoa, come on. If we don't break above, 96 to 98 in a relatively speaking short term, I don't know that we are going to be seeing much higher. And then at that point, I believe that the dollar could actually drop down into the low 80s, even high to mid 70s. If this is to happen, then I can actually see and say pretty intelligently that there is a good chance that that the Bitcoin and the precious metals are going to perform incredibly well. The tech stocks are going to do incredibly well, and but we'll see. We do have Biden is supposed to basically take an oath, so to speak, and become the new president of United States in about 2 to 3 weeks. However, there is a worrisome piece on the horizon, and it has to do with the current president, President Trump, potentially alleging that he might involve military and not not leave the White House. And so we could see some civil unrest happening, unfortunately, more so than what we've been seeing thus far. And that's a very scary part, obviously, for personal health and safety, to sort of the overall what does 2021 look like, all the way to the markets and what's going to happen. So this could be a black swan that could take down not just the stocks, but of course take down the bonds, take down the precious metals, takes down the crypto. So something to definitely pay attention to and watch out for. And it's definitely not something to play around with or to joke around with. All right, now that I've given you a little bit of FUD, you might say, let's go in and talk about some of the really exciting pieces of what's been going on in the crypto markets, and go in and take a look at stuff, because I think you will be absolutely amazed. So this first article is really talking about what happened on January 3rd of 2021. Well, we reached a brand new high. And of course, that was Bitcoin's birthday. Can you believe it? Bitcoin is 12. Hey, one more year and we're dealing with the teenager, which means lots of moods. Okay. Satoshi Nakamoto mined the first Bitcoin block on January 3rd, 2009. The price of Bitcoin reached parity with the US dollar almost 10 years ago. Today, a milestone. Of course, however, yesterday we did reach a brand new high, and now the Bitcoin is actually same as the Model 3 Tesla, which retails for upwards of $30,000. Could you have ever believed that one Bitcoin is going to buy you a car? And hey, I actually think one Bitcoin is going to be able to buy you a house, and not like a small rinky-dinky nothing of a house, because you can actually buy a house now for one Bitcoin. But I'm talking like a really, really nice house. And who knows, if the market continues the way that it's going to continue, and the dollar keeps on sliding, and we keep on printing money, which we are going to print, there's a high potential that one Bitcoin is going to buy you not just a house, but potentially an entire city block. So hodl, people, hodl. This is not a financial advice in any way, shape, or form. As you can see, I'm very, very bullish on the on the coin as a whole. But you know, this is just my way of kind of looking at the whole thing. So there is a nice little tweet of saying, hey, a Bitcoin buys you a Tesla. So when will you accept it? At Elon Musk. So we'll see if he ever will or not. Institutional players with millions to purchase Bitcoin are also gaining billionaire status only a few days into 2021. Business intelligence firm MicroStrategy Bitcoin bet that they purchased back in late summer, early fall. They put in $425 million originally. Now it's worth more than $1.2 billion. So it turns out Michael Saylor just might be a pure genius, alongside with everybody else hodling onto crypto. Bitcoin is now the 9th largest asset by market cap at 611 billion. We did see that we did fall down slightly, and it is behind e-commerce giant Alibaba and Tesla. Now, interesting piece that I did want to share with you is that when we finished 2020, the last show of 2020 before we did the real estate piece, you know, I said, hey, who's going to win, Bitcoin or Buffett? And of course, I knew who was going to win. And the cool part is it was only a couple of days before all of that happened. So I wanted to share this with you, that it is really exciting that Berkshire Hathaway used to be this like kaboom thing, right? And now it's bigger than that. And I think Bitcoin is going to take over Alibaba and Tesla and Facebook and Google and Amazon. And it's going to become probably the largest market cap piece. And we're going to be talking and discussing it. We're going to be comparing it with some of the currencies and some of the volatility, because everybody likes to talk about, ooh, Bitcoin is so volatile. I'm going to prove it to you that it's not. So stay tuned for that for sure. Total tweet volume about Bitcoin has passed that of 2017 bull run to reach 140,000 more tweets, with more than 70,000 unique Twitter handles posting about the crypto asset. However, what we're also going to see in a moment in the very next article is that while that is happening, the retail is not actually in. and you'll see that in just a moment. The other exciting piece of what happened this morning, fresh off the press, is Financial Times. 132-year-old, old Financial Times has featured Bitcoin ascent to $30,000 on its front page. And you can actually see this is as of Monday, January 4, 2021. And you can see that there is Bitcoin right there on the top and center, right along the side, with the image of Joe Biden and what's happening in Venezuela, and of course the ECB, Christine Lagarde, right here in the corner. This comes right after the 12th anniversary of cryptocurrency Genesis block that included the iconic the Times headline about bank bailouts during the global financial crisis in early 2009. There's no mentions of the bubbles, and the article particularly takes note of increasing institutional interest in Bitcoin, which of course makes it much more integrated in the financial system. Now, of course, the mainstream media still remains skeptical, and they're not quite necessarily bullish on the whole thing, and we'll see how it all turns out. I think eventually they will switch over alongside with everybody else. Before we go into anything else, 2021 brings another thing that you should be aware of, and that is we're going to have to report on that 2020 taxation and taxes. So please do note that the IRS will begin shifting from educational efforts to more punitive measures in 2021. So if you have made any profits whatsoever with crypto or anything else, please do record it. Please do report it. Again, not a financial advice. It's just sort of a logical thing. I don't know about you, but I don't want to go to jail just because I didn't tell them about stuff. So there's a significant gap between the amount of tax due in the U.S. Department of Treasury and what is actually paid, especially in the cryptocurrency space. And the IRS wants to collect on it for sure. So the average net tax gap in the U.S. for tax year 2011 through 2013 is estimated to be approximately $381 billion. And right now, with the economy and everything struggling, the tax man and the government will want their money. That means that they will be coming after you and me and everybody else, and they are putting in threats to pursue civil and criminal tax non-compliance relating to virtual currency will start bearing fruit in 2021. So it might be a good idea for you to consider reporting the what your earnings are, and of course you can still go in even if you have reported in the previous years. If you notice that there is some sort of incorrect whatever happening, it might be a smart idea to talk to a tax professional and have it amended. You're better off amending it, paying the tax, getting that monkey off of your back, than worrying every single night, is the tax man going to come and knock on my door and come and get me and take me away? So while I know many of us want to be crypto famous, I don't know that you want to be on a 6 o'clock news kind of famous. All right. So you definitely don't want to be that kind of guy. Now, the other news that is happening with side the crypto is, of course, going to China. What's happening in China? Well, you know that there are CBDC. Of course, they have been testing and they're rolling out their second test in Shenzhen. I believe it's a third or fourth test as a whole, and is giving away another 20 million digital yuan, which is worth about $3 million, as part of the ongoing real-life test of China's central bank digital currency. So now they're going to be rolling out 100,000 red packets versus 50,000 in the past via lottery to local residents. Each packet worth 200 digital yuan, or about $30. And of course, when they've done it before, they rolled it out, they only gave about I think it was the same amount, but it was a smaller number of shops and how they can do things, and 55% of the digital yuan that was consumed came through the offline stores, while the rest was transacted via Chinese e-commerce platform JD.com. I know you thought it was Alibaba and Alipay, but it's not. It's actually JD.com. I do have news about Alibaba, so don't go anywhere. The latest Shenzhen test will not enable online payment option and the offline touch to pay functions. And the reason for that is because the previous test discovers some technical bugs and loopholes and for the offline touch to pay function. And so they don't want to do that stuff. They also don't want to do an online because they want to see how this actually works in the whole, like, you know, paying the vendor when you go shopping in person. Now, I did mention I'm going to talk about the Alibaba. And since we're in China, we should be talking about that and the fact that there is news about Jack Ma actually be missing for approximately 2 months. So what do we know and what's been going on? Well, there is a mystery that has deepened about the whereabouts of Chinese billionaire Jack Ma following reports that the Alibaba founder has not made any public appearances in the last 2 months. Actually, last time he tweeted was early October, and it was right after criticizing the Chinese sort of regime of what's been going on. So that's kind of what's been happening. And since then, nobody has actually seen the guy. Nobody has heard from the guy. And now he failed to appear as a judge in the final episode of his own talent show, Africa's Business Heroes. And he was replaced by an Alibaba executive. Now, they were saying that he was indisposed and he was busy. However, what really raised some eyebrows and made everybody question and wonder is the fact that they removed Ma's pictures from the event's website. That is what got everybody worried. Now, of course, while experts like veteran investors Mark Mobius claimed that the move was designed to curtail financial institutions from getting too big, many viewed it as Beijing's reaction to Ma for his opposition to the authority. The entire episode is further intriguing given that in the past there have been a few billionaires in China who suddenly disappeared. Between 2016 and 2017, a number of billionaires went missing. Some reappeared stating that they were helping the authorities, while others never returned. And of course, right now, Jack Ma is nowhere to be found. We don't really know where he is and what's going on. I do sincerely actually hope that he is okay. But there is something deep inside the pit of my stomach that tells me otherwise. And that actually should be petrifying to you. I know it's petrifying to me, and breaks my heart because, you know, people, when they create things, we should cherish them and want to learn from them, not remove them. And when somebody questions your authority, you know, be an adult, take it, learn from it, you know, removing somebody. But then again, what the heck do I know? Okay. All right, let's talk about this now. The exciting piece that you've been waiting for all this time. Excuse me, I got so excited I choked. All right, so we will never, ever see a Bitcoin below $20,000 ever again. And this is coming from OnChain analyst Willy Woo, who believes that Bitcoin's latest rally is here to stay, as the asset will not drop beneath $20,000 again, pending black swan events. Pending black swan event. He believes that only a black swan event similar to what we've seen with COVID-19 prompted liquidity crisis in mid-March would drive BTC beneath the support level of $24,000. And I do agree. I actually believe that right now, you know, if we dip and take this dip into the low to mid $20,000 level, boy, oh boy, that's going to be an exciting day because we are still super early. And when you see some of the charts that I'm going to share with you, I think you're going to get even more bullish if that's even possible. Is that possible when we've already hit almost $35,000 per Bitcoin? Could you get more bullish? Hey, I think yes. So what's going on? Well, a different on-chain analyst explore the major similarities and differences between three most notable bull runs in Bitcoin's history: 2013, 2017, and the 2020-2021, which is where we are right now. Of course, here's some of the difference between cycles. You do know the halving or however you want to call it, you know, the split in half of the whole inflation piece of Bitcoin when it gets mined. Well, current title started about 150 days after the halving. Now, the 2017 came 250 days after the halving, and 2013 was only 50 days. So right now we're about that sort of Goldilocks kind of thing going on. Although we did hit a brand new market cap, the graph below demonstrates that there's still a long way to go to reach the 2013 and 2017 records. And so now what you're looking over here at is you are looking at this beautiful chart. The blue line is the 2013 cycle, and you can kind of see how we basically came back up and we kind of had this down thing going on, and then we hit the brand new high, and then we kind of started to sort of peter out, and that was that, right? That was the end of that cycle. Then in 2017 cycle, we started to kind of slow and prolong, and it was a lots of ups and downs, and it was pretty volatile. And then we hit the brand new high over here 500 days later, and then it kind of came back down, and that was the end of that. Well, here we are in 2021 cycle, and as you can see, we're following the 2017 cycle to a degree, right? But it's not as volatile, and it's actually much more parabolic, interestingly, right? When it came down to the infamous Bitcoin volatility, well, what's going on with volatility? 2013 cycle, again, this is the blue line, and you can see, I mean, boy, oh boy, this is the part where it was really volatile. We went up, and then it would come back down, and then it would go up and go back down. I mean, talk about the wild roller coaster of a ride. It actually looks like some sort of city right over there, right? Then the red line over here that you can see is volatile, but it's not nearly as volatile as 2013. This is the 2017 period. And of course, the volatility actually is way, way less, right? Way, way less. Now we're looking over here at the green line, and this is the 2021 cycle, and you can see that there's still some volatility happening, but it's nowhere near. I believe that this cycle is going to be way less volatile. And I know everybody talks about, ooh, the Bitcoin is really, really volatile, but it's really not. Volatility of Bitcoin is actually less than that of NASDAQ, S&P 500, and even gold, if you can believe that. So I know it sounds crazy, but hey, go in and do your own due diligence and research and find out. You will discover that it's the truth. Bitcoin searches on Google, typically good indicator of retail investors' behavior, have spiked to yearly highs. However, they're still a long way down compared to 2017. This basically lets us know that the hypothesis that what we're seeing right now coming into the market are current hodlers, right? So people that are already in the market. It's us, folks. It's us. All right. And it's the institutional investors coming in. So that's the exciting piece for you to pay attention to. This is consistent with the hypothesis that retail has not arrived en masse yet, and this rally is being driven by a smaller set of early adopting institutions and high net worth individuals. So here we go. What's been going on with the active on-chain addresses? Well, 2013, it was really, really active, and it was up and down and up and down. I mean, you can see how much up and down it was, and kind of growing. Then we've seen here the red line or the orange line, whatever you want to call the color, salmon. Let's go with salmon. You know, you can see that it's much tighter wound, and it is, you know, the sort of the bigger spikes are much later in the cycle. And here we are right now. And this is, I mean, it's barely just, you know, twittering up and down, up and down. Of course, we are seeing it. It's just not as much. And of course, we still have ways to go before we reach this 600-day thing that's going on. Large number of institutions are purchasing Bitcoin. So here are some of the cases that you should be aware of, which is going to make you even more bullish if you haven't been already. So that's number one. Number two is there's a lot of lost or locked coins. The keys has been lost for the lock. You can't unlock it. Some, they just don't want to unlock it, and that's fine. Then we have hodlers. Hello. Then we have miners who are not wanting to spend the supply. And the cryptocurrency is entering and an ongoing liquidity crisis. Illiquid supply is rocketing up at an increased rate. Previous cycles reached peak illiquidity much, much earlier, then gradually declined. However, you will see something very different with 2021 cycle. We haven't reached peak liquidity yet. Check this out. So 2013 and 2017 are going to look fairly familiar and fairly similar, right? You can kind of see how they follow each other, where the liquidity was like really, illiquidity was really, really high at the beginning of the cycle, and then it kind of became more and more liquid as time progressed, right? Then you can see somewhat similar, but kind of different. We see sort of like a illiquidity, and then of course the big old sell-off right over here. And now we're seeing something very different. And I think we're going to continue to see this more and more, because every halvening means that less and less Bitcoin enters the space, which not just naturally drives the price up, but then makes it much more illiquid. And as we have more individuals wanting to actually jump in and more larger companies wanting to jump in, and as the market cap actually increases, once we hit the $1 trillion, it's going to be impossible, absolutely impossible for the large institutional investors to ignore the asset. And when they see everybody else winning, it's kind of like keeping up with the Joneses. And you think that only people do that? You'd be absolutely wrong. Everybody does that, right? Institutions do that because institutions are people, right? And so you see, you know, Michael Saylor taking, you know, 500,000 turning into like 1.2 billion in the course of, I don't know, a couple of months. And you're going scratching your head going like, what the heck did I miss? I better get into this stuff and maybe even just put a little bit. Just put the little bit in and see if I can keep up with it. And I will tell you, people will come in 2021. What we're seeing right now, this $30,000 to $35,000 level, that's going to be a deep discount, basically well before the summer even comes. So I think that this illiquidity is going to probably peak. I don't know that I don't know how high it's going to go. I have no clue. I think we're going to see some liquidity once we hit that $80,000 to $100,000 level plus, because there's going to be some hodlers that are going to say, you know what, I'm just going to sell right now. I might as well make some profit, make some cash and stuff. And so we're going to see some liquidity show up at that stage. But up until then, it's open air all the way up and people are hodling, which means that the reaching that price is much more likely in a, relatively speaking, short term, because this bull cycle, we basically have about 12 months left, plus minus, right? So it should be ending in about a year from now. So 2021 should be incredibly bullish year for all crypto projects, not just Bitcoin, not just Ethereum, but for altcoins as well, and new projects that we don't even know and haven't even heard about because folks are working, you know, they're building it right now. They're not ready to tell you about it. They're building it right now. So this is a really exciting piece for me personally when I take a look into, you know, the crypto markets and what's been going on. Now, one of the interesting pieces that I also wanted to do is that we've done a bit of the whole capitalization of like comparing a Bitcoin to some of the large companies, and I've actually compared them to some of the countries. And I think it's really important and interesting to take a look at something right now. So what I want to show you right now, what you're seeing on your screen is market cap of different currencies around the world, right? And unfortunately, I can't sort it by this because coinlib.io, hello, if you could do me a favor and let us sort by market cap, that would be amazing. The only thing you can sort is basically the last 24 hours, and that's about it. So my apologies for that, but here are the 18 fiat currencies that have a pretty high, you know, they're in trillions, right? And you can actually see that Bitcoin right now, when you compare, and they're all in dollars, when you compare it, that we are actually right around, you know, I mean, Russian ruble is, market cap is about $600 billion. Well, Bitcoin is about $600 billion, right? So we're on par with ruble. We are definitely beating, you know, many other currencies out there that exist, you know, from Turkish lira to Mexican peso. You know, we haven't, you know, Thai baht, we're about to break it as well. But you will see that there are some that just have massive amounts of market cap. Chinese yuan is 27.6, almost 7 trillion. Then we have some of the larger ones are also going to be euro and the US dollar. Japanese yen is at 13 trillion. So we're not quite there yet. We actually haven't even reached Brazilian real or Indian rupee to actually come in here. But I think that that's going to happen, and there is a very high probability that we're going to be hitting that in 2021. The other piece that I thought was really interesting is that the fiatmarketcap.com, what they do is actually they have taken the market cap of different currencies, right? And what the circulating supply is, you can see it right here on the right hand side column. And so they take all of the different currencies and basically where it was what the price is per sat. And you can see that $1 right now is 3,139 sats. So in order for one sat to be $1, take the current price of Bitcoin and multiply it by 3,139. So that should give you a price of kind of where the parity of one sat to $1 might be, which is absolutely ridiculous. And I believe when I say ridiculous, I don't mean like never going to happen. I just think it's like ridiculous when you start thinking differently about what Bitcoin is and what it can be. A lot of times, you know, what I see in the space of the cryptocurrencies is that we go in and we fight with one another, right? It's the most bizarro thing on the planet. It's, you know, Bitcoin Cash versus Bitcoin SV versus Ethereum versus Tron versus folks, hello. We are basically 20 crabs inside a pot. Okay, that's it. There's a big old world out there. And so instead of beating the crud out of each other on Twitter, how about we support one another, build projects together, and really revolutionize the world? It's not necessarily about one versus the other. And I'm probably going to catch some slack for saying that, but I could care less what you think. Okay, that's just my opinion. I think it's absolutely ridiculous that you and I sit in one room and beat the crud out of each other for $10 when there's 10 trillion outside the door. 10 trillion outside the door. All you got to do is, well, stop fighting and go outside. That's it. And invite the outside in. So I think that that's sort of where the future is. I think more and more people are realizing that. More and more people are coming on board. And, you know, as that happens, I think that that's what's going to drive a really big difference in a world around us. Now, one of the things that I also wanted to share with you, I do have a couple of stories before we end today's show, has to do with what's going on with the brand new laws that are rolling out in the United States, and it has to do with minimum wage. So minimum wage is rolling out and increasing everywhere. And on one hand, that sounds really exciting. On the other hand, if you actually look, I didn't specifically, I wanted to stay on Google News. I didn't specifically go into a specific article is because I wanted you to take a look at the articles of what's going on. We are actually seeing many states that are seeing their minimum wages increase. And on one hand, this is really good and exciting. What many people don't understand, and again, probably going to catch flack for this too, but I could care less again, is that when minimum wages increase, that doesn't mean you're going to be able to buy more because the price that your dollar is worth less. Okay, so struggling businesses, how are they going to keep up with it, right? So here you go, right over here. The only thing I can do is click. Maybe I can highlight it. I don't know. But minimum wage increase good for workers, tough on California small businesses during pandemic, right? So when the wage increases, it sounds really, really good, right? And this is how politicians get the votes because, hey, we increased the minimum wage. The business can't afford to pay you. They've been struggling already. So what do? They work you less hours and they have less employees. So watch out for a brand new wave of unemployment to hit the shelves in the very short order. Again, my crystal ball broke. I have no clue how things are going to play out. I just look at it as a business owner, as an investor, and go and say, this doesn't make sense. I am not earning more money, right? So I have to let go, folks. So that's number one, risk number one. Risk number two to also pay attention to is that the prices of goods and services are going to actually go up, right? Unless it's technology driven. So what's going to end up happening is that we're going to actually see that many of the businesses are going to start adopting more and more of the technology. Not because they want to, but because they have to in order to compete. Because if I can go in and do the same job, perform same functions for a tenth of the cost with the 100% margin, right, of profitability, you would, of course, want to do business with me if I do exactly the same or even better, right? So my competitor has no option but to go in and go and say, I got to go and adopt the technology. So technology is going to keep on going up, which is what makes me believe that technology stocks are going to continue to actually rise and perform really, really well in the 2021, pending something major doesn't implode. But even if it does, we can see the sharp decline, and potentially that could be the first piece to recover alongside cryptos. And the other piece that also will be happening is that a lot of these small mom and pop shops, small organizations that cannot go technology driven, that's when we're going to see layoffs. So if you're an employee, one of the best things that you can do in 2021 is invest in yourself, invest in your own education, train yourself. And that doesn't mean you have to go to university, although you can by all means. But there's a lot of things on YouTube, channel like this. There's many, many channels out there that you can learn so much. There's all these different boot camps that you can go and retool yourself. And, you can start over at 15, at 50, at 25, at 85. It's just a matter of what's in here, right? What's in here. If you tell yourself, I'm 45 and I'm too old to get started, tell that to Colonel Sanders, who actually started at 60 something. Okay, so you're still 20 years younger. Okay, 15, but you still have plenty of time. So don't let the whole age or whatever crud you have in your head go into your head. You can go in and you can retool. If you can chew gum and walk, you can do something. So the best thing you can do, and I don't give financial advice, but hey, I'm going to give you an advice right now you didn't even ask for. The best thing you can do is chuck the TV. And maybe you don't have to chuck the TV. Hold on to the TV, chuck the cable service, and use the TV to actually watch and learn. So that would be my piece. And the final news that I wanted to share with you has to do with the SolarWinds attack and what's been going on. Well, SolarWinds hack might be much worse than originally feared. Some 250 government agencies and businesses may have been affected for months. Microsoft said that the hackers basically compromised SolarWinds, and they were able to impersonate any of the organization's existing users and accounts, including highly privileged accounts. The attack came from within the U.S. and apparently allowed the hackers to evade detection by the Department of Homeland Security. Systems were infiltrated beyond just the presence of malicious SolarWinds code, and the hackers were able to view source code in a number of source code repositories, but the hacked accounts granting the access didn't have permission to modify any code or systems, which you don't really have to do that, which means that short term there's nothing to happen. But if I can actually copy your code and deploy it and then do something and retool with it, so watch out for many, many hacks coming our way in a short order very, very soon. Ranking member of the Senate Intelligence Committee told the Times that the hack looked much worse than he first feared. The size of it keeps expanding, and it's clear the United States government had missed it. What this also may mean for you and I, something to be worried about and pay attention to, is that not only are we going to expect more and more hacks to start coming in, so you got to be smarter about what you do open, what you don't open, and really verifying the URLs, verifying the email senders, verifying every button that comes your way. You better verify it, okay? And if you don't know how to do that, there are people, there are techies out there on YouTube teaching you how to do that for free. So spend 20, 30 minutes, couple of hours, and go and learn how to do that and protect yourself, because that's coming. The second piece that is also coming that you can expect to come probably a bit longer term is there's going to be new laws and regulations when it comes to the online businesses, data collection, data keeping, and all that stuff. So if you are in a business, in an online business, that's something for you to pay attention to and prepare for. So there you go. That's it. That's the news for today. Hey, I do want to welcome you all. Thank you so much for watching. If you have enjoyed the show today, if you have learned anything, do me a huge favor. Like, subscribe, bell button, hit all, and share it with people you know. And I will see you tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away. All right, y'all.